let us move on to another stock which is buzzing in today's trade. Divis Lab has announced a long-term manufacturing and supply deal with a global pharmaceutical company, and my colleague Varsha is joining us with more details of this deal.
Thank you for that. So yes, Divis has announced a long-term supply deal with one of the global pharmaceutical companies, though the name has not mentioned because of the confidentiality. But the company will supply advanced intermediates to the company. Now, please note that advanced intermediate is used to make API, that is the main salt active pharmaceutical ingredient. Now, if I were to talk about this scope and impact of this, this is expected to contribute meaningfully in Divis custom synthesis segment. Now, partner's name and specific details are not mentioned, and for this Divis has planned in capacity, or rather capex of 650 to 700 crore in capacity expansion, and the expansion will be at existing manufacturing facilities, and the investment will be funded through internal accruals. We all know that Divis has almost 3,500 rupees crore of cash sitting on their balance sheet. While this agreement ensures assured supply for the customer and allows Divis Lab to expand its custom synthesis business, which contributes almost 53% to its total revenue. So, a thumbs up on the agreement that Divis has signed.
Well, thank you so much for that, Varsha. And now another buzzer in focus today is Kansai Nerolac. It is making some smart moves. The company, in fact, has targeted a 9% compound annual growth rate in sales over the next 3 years. It has also announced a target of 14 to 15% EBITDA margin over the next 3 years. And my colleague Mahima is here to join to tell us what's exactly driving Kansai Nerolac at the moment.
Right. So, basically what has happened is Kansai Nerolac Japan had hosted an analyst meeting where they discussed strategic moves for India business, where they have guided that for the next 3 years the sales CAGR that they want to achieve is 9%, and the EBITDA margin that they are aiming at is 14 to 15%, and from a longer term perspective they are expecting EBITDA margins to reach around 18% by FY30. Now, growth over the next 3 years will be led by the industrial segment. Focus of course will be on defending the decorative market share as well in the primary and key markets. In terms of decorative segment recovery, they are expecting that to happen in the second half of next financial year. India to be growth engine for Kansai Nerolac Japan, and they target the industrial margin that has already moved closer to decorative margin to be overall margins at 18% by FY30. In terms of acquisitions, they have also said that they will go on and do bolt-on acquisitions with regards to the industrial segment overall. With regards to this, there was a Macquarie note that has come out, and they've maintained a neutral with a target price of 255. What Macquarie believes is that they're liking the overall focus on premiumization and the confidence that the management has showed in terms of margin expansion, but overall they believe that impact on profitability might take place because of Grasim's entry in the paint segment, which makes overall them a little cautious for Kansai Nerolac. So this is the overall view of what has happened with the company and the updates with respect to the call takeaways from the Japan analyst meet.